Good morning, Dennis Smith reporting from the Board of Trade in Chicago. Tuesday, June 18th, cattle futures lower across the board. Market rallied yesterday. Another fund order, buy stop elected at mid-session. I think it was around 10 o'clock, but doesn't matter. Supposedly a large buy stop elected turns into a market order, basically cleared the deck as far as taking out all offers. In 30 seconds, August cattle futures rallied about 150 points. Same thing basically happened last week in the cattle market. Liquidation continues with open interest declining on a daily basis in the live cattle market. Exactly what's behind this fund type activity and this buy stop activity, I guess I can't venture to guess, but the downtrend in cattle futures remains intact. 118 bid is what we should see surface today versus a 120 trade last week. Wholesale beef was higher yesterday, and the talk was it was a beautiful summer weekend, really the first one, and we had good clearance on the East Coast, and that brought some beef buyers into the wholesale beef complex. Wholesale beef is at 201.19. That was up $1.66, and it might be up again today. But I think the wholesale beef market begins to stabilize and then work back down below 200. Once 4th of July bookings are completed, that could be pretty much any day, certainly by the end of this week, you're probably going to see the wholesale beef drift down below $200. It's going to have to come down to a price level where it will finally stimulate and attract some demand. And I don't think that $200 wholesale beef is a price level that will accomplish that. So look for the slide in cattle futures to continue. Look for the downtrend in feeder cattle futures to continue. Last week we were buyers of feeder cattle options, put options I should say. The August feeder puts, 140, 139, 138 puts. We bought some more yesterday on the rally. I look for the long-term downtrend in feeder cattle futures, despite tight supplies, to remain intact. There's no hedge. There's nothing promising in the deferred contracts, live cattle contracts, as far as a premium to cash situation. It's just not attractive, and we're going to have to see lower feeder cattle prices as to give some hope to somebody that's willing to feed cattle and take a gamble, because there is no hedge, nothing even close. Opinions are my opinions alone. They are not the opinions of ADM Investor Services, nor are they the opinions of Archer Financial Services.